The rand, as Alicia said, 6.89, so tiny bit of weakness creeping through this morning, but holding pretty firm. And of course, we had that news out on Friday that Lesetja Kganyago, the Director General at National Treasury, would be moving across to the Reserve Bank, and the market really taking that in its stride.
Absolutely. I think we saw a market initially ahead of that announcement very concerned about what the announcement really entailed. Post the announcement, pleasurable results, obviously a very, very strong member to the new member to the MPC, which holds and bodes well for the South African Reserve Bank. I think it's going to leave a gaping hole at National Treasury, but I'm sure that Mr. Gordon will fill that post quite adequately. So from a market moving perspective, certainly nothing untoward and certainly nothing negative at all. In fact, if anything, there's a lot more longevity, continuity, and a lot of depth of experience at our Reserve Bank.
So that's good for monetary policy going forward and for continuity of monetary policy. How about fiscal policy, though? Any concerns in the market about who might replace Mr. Kganyago over at the Treasury?
I don't think there's any concerns at the moment, Steve. I think that what you're seeing is we will be interested to see who fills that post, but I think a lot of people are very confident with Mr. Gordon as the Finance Minister, and I've got no doubt that he will find somebody adequate to fill that role.
Well, a lot more movement on the euro-dollar movement this afternoon. We had that dollar strengthening slightly. US Fed officials coming through quite hawkish towards the end of last week, saying there's unlikely to be more quantitative easing, and at the same time problems in peripheral Europe plaguing the euro towards the end of last week.
Absolutely. I think there's a couple of flags that we need to keep in the back of our mind. The BOE itself has seen some hawks come through. In fact, today we saw Mr. Stans make a statement around the fact that he also feels that the Bank of England needs to look at hiking interest rates. He was one of the members that called for 50 basis points at the last MPC. The ECB is under pressure, and yes, you're right, there will very unlikely be further quantitative easing coming out of the United States, as inflation is something that the market is consistently concerned about. That being said, though, the horizon for interest rate hikes still looks to be longer rather than shorter, but the market's keeping it in the back of our minds that this pressure that's coming through, specifically with the likes of food prices, with the likes of oil prices, etc., does pose that upward risk, and it continues to be a risk even in our local environment, where the rand really has been the reason that we've managed to maintain the target band that we're currently trading in.
Well, for how long do you think the rand is going to shield us from some of those energy and food price inflation that is building globally? Because we have to get to that point this year where we're starting to build on the base effect of last year.
Yeah, I agree. I think that what we're seeing at the moment is a rand that's very, very range-bound, Steve. If you look at what's happened this year, and in fact at the end of last year, we saw the rand trading 680, 720, and it hasn't broken out of that. In fact, over the last month of trading sessions, we've seen 687 as the levels that we're trading on the rand, and that's continued to be the momentum that we've seen. We've seen the importers in. Once we get closer to the 680 levels, we're seeing exporters closer to 7. We're seeing a very flat rate environment for the foreseeable future, and I think that the big risk still lies in the fact that we can potentially see some sell-off from foreign investors as we see interest rates and the likes of US Treasuries, UK gilts, etc. offer slightly better value. So I think that that's where the risk environment lies. If we see the rand break above that 720 again and open up towards the top side, it certainly is a big flag that indicates that inflation certainly could become a massive pressure going forward.
Do you think that investors are at this point ring-fencing problems like Portugal, looking past that and focusing rather on the inflation issues that the currency markets are going to be affected by?
Well, we've had an eventful year so far. I mean, if you think about the fact that we've had this massive tsunami and this the uncertainty around what's happened with the nuclear fallout, as well as the fact that we've had other global disasters and this oil price that's continued to tick higher and higher as we've had unrest in the north of Africa. I think a lot of that has taken eyes of what's happening in the peripheral European region, which has continued on from what we saw last year. And unfortunately, it doesn't seem to have abated. It certainly is continuing to rear its head. If you look at what's happening in Portugal, downgrading of that sovereign, the continued stress in the banking sector in Ireland, continuing to place unbelievable stress and pressure on the Eurozone itself, despite the fact that with all of the upheaval that we saw globally, we saw the euro as a currency manage to strengthen, and that had to come back at some point, and that's what we're currently seeing. So I think that you're starting to see data come out of the US that's quite positive, and that's eroding some of the European gains that we saw recently. As we've seen the euro pull back, we can expect a little bit of pressure on the rand. We're also seeing profit taking in the likes of the commodities, specifically in gold, which has had a massive rally. So we can expect some form of consolidation and a little bit of a weaker currency in the weeks to come.
Well, you talked about some of that US data. We had GDP revisions coming through on Friday, 3.1% for the fourth quarter, up from 2.8%, and slightly better than the markets expected. But at the same time, we also had consumer confidence numbers coming out, and they looked pretty bleak. So it's still quite a mixed picture coming out of the United States. And what do you think is going to happen when that quantitative easing is withdrawn from the system mid-year?
I think that the globe, unfortunately, is in a similar scenario. You're seeing consumers remaining under pressure. You'll see when you look at credit extensions, you look at confidence, you're seeing a consumer that, unfortunately, the job market is still something that hasn't reached a level playing field. People are concerned about their jobs. They don't necessarily want to spend in this environment. But what you are seeing is you're seeing inventory rebuild. You're seeing demand coming out of Asia, persistent demand coming out of Asia, and those are the positives. So in terms of the US, the GDP number was positive, and what you've seen is a follow-through in terms of the currency against the likes of the European currency and the sterling. But there are other things that are brewing, and that's where the big concern lies. What does it mean in terms of the austerity that's got to still play through in Europe? There's a huge inflation issue coming out of the UK, and the US remains under a significant amount of pressure because their consumer and their housing market has not come online. Those are scenarios that haven't changed from the doldrums that we found ourselves in last year, and they persist into this year. And I think until we start seeing a change in that dynamic, unfortunately, consumers will remain under extreme amount of pressure. In the local market, you're going to see private credit extensions this week. Hopefully we'll see them picking up a little bit in the private credit, but when it comes to business, you're not seeing that sustainable long-term investment. And those are the kind of concerns that continue to linger from last year.